Hey everybody, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to work our way through Twitter, look at some commodity and financial information, and it may even venture a little bit on the fringe of financial information and maybe wealth preservation or how to grow wealth, stuff like that. But let's dive in here. I'll give you my financial opinions. And here we go. So we've got, again, if you want to follow me, it's at finding_finance. If you'd like to join the website, we do have question and answer sessions on the weekends. So that's good too. So Logan, this guy was saying, imagine bragging about the economy based on lines at fast food burger joint. And then he posted this, which is basically real estate retail sales since the end of the last recession. And we've been going higher, not lower. So we haven't pulled back on at least retail sales since the last recession in 2008 or 2020, depending on how you want to look at it. Chris Botcher says the key to longevity is to maintain your insulin sensitivity. Resistance train, walk after meals, eat high protein diet, avoid drinking your calories. Carbs should be from whole foods. Use an eating window to rest the gut. That's basically what I do. I just saw that. Not that you guys have to follow me because of this, but that's basically what I do. I resistance train. I don't drink any calories. I just drink water. And then I don't really eat that much. I skip breakfast and all that stuff and have a window to rest the gut. Every time you eat your insulin, usually your insulin spikes. And you don't want to basically spike your insulin for a long period of time. At least that's what people say, some doctors. In theory, OPEC Plus just eliminated any chance that Biden administration would refill the strategic petroleum reserves. And maybe there's something going back and forth there. OPEC did cut 1 million barrels per day of production. I think they're getting annoyed at the price, even though inventories are very tight. This is definitely going to throw that over the edge. I thought this was interesting. Check this out. It says the most expensive city to raise a child per year: San Francisco, Boston, Los Angeles, and Detroit. Why Detroit is one of the most expensive cities to raise a child in? The first thing that came to mind is like maybe it's hospital costs if you get shot or something. I don't know. But I just thought that was interesting. J-Rod says, and let's see how well I fit into this. He says, read Simple Path to Wealth. Here's the plan. Read Simple Path to Wealth, create a budget, get match in a 401k, pay off bad debt, build an emergency fund, open a Roth IRA, set up auto contributions, invest in whatever that is, and then live life. This is the foundation, that at least to what he thinks is. I don't have a budget, guys. I never created a budget. I don't have a budget. The way that I view things is, do I need this? And if the answer is no, I don't really need it. I don't really care about it then. I do spend some stuff on things that I really like, but for the most part, I save a vast majority of the money I make. I save and invest it. I do get a 401k match just from one of the jobs that I work, but I mean, yeah, that seems obvious. Obviously, get the match if it's there. Pay off bad debt. I don't have any debt. I haven't had bad debt ever in my life. I just never accumulate it. So I make, a budget is saying that you have X amount to spend on whatever. But a budget and bad debt, I just don't buy stuff I don't need. And your budget's going to fluctuate based off of my budget it basically moves up and down based off of what I eat and where I eat. And where the family eats and stuff like that. And I've created enough income through dividend paying stocks and all this other stuff that I don't really have to budget every penny there is. And if I don't take on any debt, I don't pay any interest going in the opposite direction. So I don't have fancy cars. I don't really buy anything that's really fancy or expensive. So I mean, I do pay, I do some things that I enjoy that do cost money. And I've ramped that up with age as I have saved more money and have become wealthier. But the whole key, I think, if you really want to if you want to do well in life, save as much as you can the earliest possible time, learn about investments, take some of that money, probably buy a house with it to try to lock in or reduce your expenses, and then just invest everything that you can for your 20s and maybe your 30s. And then after that, it's pretty easy. Everything kind of falls into place. If you have kids or if you have whatever, your expenses go up, your food, your food bills, all that stuff go up, your health bills, because if they get sick and you're going to have to bring them in, there is those types of expenses that do go up if you have a family, and it's substantially more money than it would be living by yourself. Substantially more money. And if you are married, then and you have kids, it depends if your spouse works and he or she or whatever you want to call it may not work, and you're going to have to take care of the other person too, especially if you have multiple kids and you don't want to put them in daycare, and daycare costs a lot of money, and it's maybe not even a decision based off of finance, but more on the health and wellness of the kid. Depends on what you want to do there, but that's definitely going to increase the costs quite a bit. So that is something you want to definitely take into account. If your employer gave you a 5% raise and inflation was 5%, nothing changed. But it did change. If your employer gave you a 5% raise and your cost of living is way below what you bring home, so you don't live paycheck to paycheck, you live you live way below your means. A 5% raise on your top, your top of the line dollar there actually does have an impact and will be easier to live if inflation on your cost of whatever your cost of living is way lower. So you actually do come out ahead, even though both of those are 5%. So 5% of, let's say, your living costs are $40,000. I'm just making it up, and you make $90,000. 5% of 40,000 is a lot less than 5% on 90,000. So you do actually come out ahead, and that also is indexed. Your base salary could be indexed to other things like 401k match is 6% of that larger amount. There's other things as well that would be indexed to that base salary that is now larger. So yes, it's actually beneficial, even though inflation's 5%, you get a raise of 5%, you do come out ahead. Saudi Arabia said it will make an extra 1 million barrels per day production cut in July, taking its production to lowest level for several years after a plunge in crude prices. Other OPEC Plus nations will stick to existing targets this year, so Saudis will shoulder the burden. Oil. Now, there's some people saying that U.S. oil production could be peaking here at some point from the shale oil, and that the majority of the new shale oil production is where the growth came for the past decade or so. It's going to be real interesting to see what the next decade looks like and if we can even grow production substantially. But that's my worries, is that we can't grow production, even irrespective of price. I think we can grow it maybe a little bit, but I don't know how much. This guy says, imagine the dot-com bubble combined with 2008 equals now. I don't think it equals now. I think it equals, we have to have 10 months of inventory or something like that. And then maybe you could say that the dot-com bubble combined with combined with whatever it is now. So it's basically a technology bubble combined with a housing market bubble, but it's not that. So this guy is wrong. It says, how much passive income do you expect to make this month? I'm guessing I'll make around $300 or $400, mostly from dividends. I make a little bit off of affiliate links. Well, I mean, I think this is a good way to think about things. How much passive income should one try to aspire to make? I'd love to have maybe 10 to 20 grand a month in dividend income. That's my goal. $10,000 to $20,000 a month of dividend income. And I've got a pretty good amount towards that. Now it just depends on how the commodities perform, and I will continue to add into those stocks that are paying large dividends across the board. And what I mean by just across the board, that's in retirement accounts and in individual accounts. So some of that money I can live on. Other things can be protected in non-taxable accounts that you could take out in your retirement for a long period of time, and you could continually pull more and more out on a tax-free basis. So that's basically what I'm trying to build up to, is something on the lines between 10 and 20,000 a month over time. Copper will be making a decisive move versus the stock market in the coming months. So this is copper versus the S&P 500. What he's got here is kind of some sort of move here of a breakout lower or a breakout higher. To me, it looks like a double bottom. So if you put a line across here, you've got your lead-in pattern, bottom one, and then this could still go lower and then go on up. It doesn't have to go higher. You can go lower and then go higher afterwards. So I don't know if that matters too much, but yeah, that's a ratio there. Here's Logan. It says, in America, we have 30-year fixed rates too. So this is the widespread use of variable mortgage rates, and high debt burdens make some housing markets more vulnerable to rising rates. And we've got like Norway and Denmark way over here, Australia, Finland, Sweden, Canada. These are more vulnerable. And look at United States. We're like way over here. And this is the share of adjustable rate mortgages and new mortgage issuance. We've got like zero, hardly any adjustable rate mortgages. And the household debt as percent of gross income is like not that much in relationship to like these guys over here. I mean, this is all ridiculous. Even the Netherlands. That's pretty compared, like bubble wise. United States is the furthest from, I think, a bubble of any of these other states or countries, I should say. Coming on down, it says American homeowners are house poor, including the 42% of them who don't have a mortgage. Mortgage debt service payments as a percent of disposable personal income, extremely low. And that's 4%. I don't even believe that statistic. Is that the case? It's that low? That is incredibly low. And maybe that's just people who've got a 30-year mortgage that, they're 10 or 20 years in, and it's a very small percentage of their overall income. And they may have refinanced that at a very low interest rate. Here's something that's interesting. It says there's 124 million households in the U.S. Household net worth in the U.S. is 140 trillion. The average American household is worth 1.1 million. Wow. The only thing I'll say here is this is an average. On the upper end of this, it drastically would skew the average. What I would use in this case is the median income. The median American household net worth is what I would look at. I would not look at the average, because the trillionaires are going to throw that way to the upside. So it's the median American household worth is probably like 100 grand or less even. But those trillionaires are going to throw this way off, and it's going to look way different if you use the median. I think it'd probably be like a couple hundred grand or something. Now, this is interesting too. I went through math. I did math, a lot of math in college and stuff like that. And it says right away, to make a 10 to solve 8 plus 9. I'm sorry, guys. I did not have anything like this when I grew up in math. There was also someone who was showing me some new math techniques. This was like 10 years ago, and they were showing me how to do stuff. And I was like, I have no idea why they would teach it in such a way. And like trying, like just thinking about how they solve some of this stuff and how people have learned it. It's so slow and bad that I don't know. It's just weird. I never really had any problems adding things together, subtracting things together, dividing, multiplying. I mean, that was all pretty easy. And when you get to high level math, I mean, it takes like 2-3 pieces of paper to solve problems, especially in a lot of the engineering stuff. And you can't solve. I mean, you're going to have to know math like it's the back of your hand. I mean, you got to like really get through it. And this just seems overly complicated, but I don't know. That's my take on it. It does seem kind of weird. And it says, I don't even know what this is asking him to do, Dad. Write a way to make a 10 to solve 8 plus 9. I guess you create a box of 10, and then you've got 7 left over. I guess that's how you would do it. So yeah, that's probably how, and that would be 17 because you created a box of 10, and you'd have 10 in here and 7. I'm guessing that's what they mean, but whatever. But that's what I've got for today, guys. We're kind of just cruising along. I see uranium going. It did well last week. We'll see if that continues this week. That'll be an interesting one to watch. Another interesting area is going to be oil with the reduction in production coming up in July. That'll be another one because we're going to see what they've already cut is going to come into existence in June. And then if they cut again in July, we'll see where this price goes. A lot of people say, why are they cutting if oil demand is so robust? I don't know. I don't know why they're cutting. Inventories are still tight, and they're just going to get incredibly tight. Rocket launching the stuff to the upside. Maybe Saudi Arabia is not happy with America for whatever reason. It could be something completely non-supply demand related. And maybe they think that America is going to try to drive the price down through paper barrels, push it down to try to fill their strategic petroleum reserves up. But maybe they don't want anything to do with that. Maybe they're like, nah, I don't think so. We're not just going to give them a bunch of free oil or oil at a big discount. We're gonna make them pay for it. And that might be the case. That might be the case. But that's what I've got for today, guys. Thumb up for the content. Subscribe to the channel. Subscribe to the website, finding-value.com. If you are interested, join our community. And we'll catch you next time. This is Finding Value.